What's up, guys? Welcome back to the channel. In today's lesson, we're going to be covering institutional direction, how I identify institutional direction by understanding my valid order blocks and price inefficiency. So when you understand how to select a valid order block and identifying your price inefficiency, it's very important to understand institutional direction, understanding where the institutions are planning to move the market. The truth is, when the institution moves the market, they leave footprints, and it's very important to understand their initiative. When you develop skill to identify and interpret institutional footprints, this will enable you to make more informed trading decisions, and you will equally improve on your market performance, that is taking good trades and identifying good areas you can take your profits. This particular trade was shared to the VIP community, and how I got this trade set up is simply understanding institutional direction, where the institutions are looking to move the market to. So I'm going to explain how to select a valid order block, identifying your pricing efficiencies, which is going to help you know the institutional direction. This is exactly what we'll be covering in today's lesson. So for this particular trade opportunity, over here, this is the trade opportunity when it was shared to the VIP community. So I'm going to use this particular example. I'm going to show you how I got involved in this trade. And for this particular trade, this was not actually the first point of interest. We had 2 points of interest which offered good results. I'm going to use these 2 trade opportunities to show you how you can identify institutional sentiment and where the institutions are moving their money to. So let's see that quickly. AUDUSD, the 2 hours time frame. Like I said, I'm going to show you how to find institutional direction. As a matter of fact, to know the next direction of institutional traders, you need to understand their previous price, because the previous price determines where they're going to move to next. Okay, this is one thing you have to keep in mind. So when I was looking at AUD/USD with my VIP students, what I was looking at basically are the order blocks we have in the market, because if you're able to identify a valid order block, understanding your areas of inefficiency, as well as understanding your inducement liquidity areas, this is going to help you make informed trading decisions. So AUD/USD, though, 2 hours time frame. Most times when I share my trade opportunities, I don't find those setups and execute immediately. Sometimes it might take me months, sometimes it might take weeks before I execute and make money from this market. So the very first time I was looking at AUD/USD, the particular point of interest I marked was the one we have down here. Over here, we had a very valid point of interest, and as you can see, it took price a lot of time to come back for the mitigation of this level. And the thing is that I wasn't able to get involved in this particular level. Why? I wasn't confident enough trading from this point of interest. Was this a valid point of interest? Yes, it was a valid point of interest, and it's a good order block. But there are some things I see in the market which might make me lose interest in trading from some areas. So when I disregarded this setup, not getting involved, I only had interest in approaching this market with a second entry, because sometimes when I spot a trade opportunity, I decide to go for the second entry to make the most out of it. So zooming in right now, when price moved away, I spot something in this particular market. One thing I said you should do and pay attention to if you want to identify the institutional direction is trying to read the previous price action. The previous price action most times determines the next direction of the institution. Firstly, you've seen that price is currently moving to the upside. And if you look at this price action right now, where is your valid order block? This level right here is your valid order block. And from what you can see, we have a change in the market direction. Price shifted in its direction right here, causing price to continue to the upside. Now, if you were paying attention to the last entry model, which I explained, this is the exact place you would have looked to get involved in this market at the retest of the breaker level. But I wasn't interested in getting involved from that level. I was just paying attention to the valid order block I have right here, because I focus on my supply and demand and I trade my order blocks. So this is the valid order block we have over here. Although this order block was refining down to this particular level right here. Now, what makes this order block a valid one? I said one thing you have to pay attention to is your fair value gaps. And you can see we have fair value gaps right now. So I'm going to give you a list of things you should pay attention to while trying to mark your institutional reference points. That is areas which you could trade from while trying to identify potential reversal points, because your order blocks and supply and demand levels, these are reversal points. Why do we see these areas as reversal points? They are reversal points because institutions has entered their previous position right here, and the full position wasn't actually opened at this area. Why? They will wait for price to come back for the retest of this area, not just coming back to retest this area. They will equally come back to rebalance this inefficiency. So anywhere you see an order block having an inefficiency, price equally leaving this inducement area, because this is clearly an inducement area. Once you see something like this is a valid point of interest combined with price shifting in its structure. This is a valid market structure shift. So here was the whole trade opportunity. So this was exactly what I spot, and it was actually shared to the VIP community. And if I try to zoom out right now, this was the whole trade opportunity right here, a very valid zone. And another thing you have to pay attention to is trying to find areas that has high probability. So this was a high probability trading setup, and price took its time to build more liquidity and inducement. This is a very big liquidity void right here. Price built this liquidity and it equally came back for the mitigation. So I'm actually going to explain the particular setup which offered good results, and I'm going to show you how I was able to identify that trade opportunity. So I'm going to play price for right now for the mitigation of this particular level. So I actually got involved in this particular level, and this particular setup was also shared to the VIP. Let me show you. So here was the exact trade opportunity when it was shared to the community. It was shared around 23rd of March. And as you can see, this is the exact thing I'm explaining right now. Understanding areas the institutions could possibly get involved. How can you identify these areas? Looking at the previous price action. Now, let me explain again with the exact trade opportunity I shared. You see, we have this valid order block right here. What makes it a valid order block? We have this shift and structure here. What else can you clearly spot right here? Price left and inefficiency. So whenever you see an inefficiency above your order block and having your inducement area few pips above that point of interest, provided there is this inefficiency gap and there is liquidity resting above that point of interest, that's a valid point of interest, and you should pay attention to that. Another important thing which you need to take away, which I've not talked about, is making sure that there is no inefficiency underneath this zone. So I was very, very safe in this particular trade opportunity. Why? There is no inefficiency underneath this point of interest, and you see price was already reacting from a key level. So it was a very good trade opportunity, and based on what I explained, this key level has already been identified weeks ago, but I wasn't able to get involved. Why? I didn't have the confidence to get involved from that particular level. But price reacting from a key level, presenting all the confluence of smart money right here, this gives you the confidence to get involved. And you see, after spotting this trade opportunity around 23rd of March, this was the area price mitigates the level the first time. And while price was already reacting, you see me marking the second point of interest, which I already showed you when I started this lesson. Back to the charts. So let's just press price forward and see how price reacts to this point of interest. So this is price coming back, mitigating the level. And during the mitigation, you can use any entry method of your choice. But based on the updates I dropped, I've been entering the market with an aggressive entry method. So I hope I explained why I use the aggressive entry method when I get involved in my trade opportunity. So this is price respecting the zone, reacting to the upside. And around this particular area, I was able to make 4% from the setup. So you already know that when I get involved in my trade opportunities, I usually go for 4%. Now, someone is going to ask me, why did you short the market when you already had price reacting from a key level? Sometimes when we trade in the financial markets, you just have to pay attention to what the institutions are doing. Just like my recent updates, I said, when you trade in the financial market, you shouldn't be guessing, okay? You shouldn't guess. All you have to do is approach the market with a plan and execute your plan week in, week out. When you execute these plans week in, week out, it's going to help you secure the big profits in the market. Now, at this particular area, what you're going to notice is that we actually have a shift in structure. Yes, we have a shift in structure based on the internal structure. Now let's go ahead and read this. At this particular point, this was the low that was formed. After price formed this low, reacted to the upside, formed this high right here. After the high was formed, we had a pullback, price forming the lower low, then react to the upside again. We have price printing this higher high. So this simply means that the institutions are currently pushing to the upside. So after the higher high was formed, what is your expectation? Expectation in the market is that we're going to have a pullback that is going to push price high, right? This is if you understand market structure, because understanding market structure is actually going to help you know the direction of the institutions, know where the institutions are likely going to move to next. So this is where a lot of people get confused. Now, this was the low we have right here. So our expectation while analyzing the markets based on structure is that price shouldn't go underneath this low. Yeah, we have some scenarios where price goes underneath a low, forming a shift in market structure, and it continues to the upside. But in this particular case, we have some confluence which make this a high probability trade opportunity. And what are the confluence? Look at this particular high right here. What can you see? We can spot a very obvious QML level. So if you've been paying attention when I teach about QML level, believe me, you would have gotten involved in this trade. I think 1 month ago, I released a lesson on QML level where I said institutional footprints combining with QML level. So if you've been practicing that setup, believe me, this would have been an easy catch for you. So this is a QML level at this particular area, but I don't usually trade QML level. Why don't I trade QML level? Most times, my QML level usually aligns with the other blocks I select in the market. So I just focus on selecting the other blocks and forgetting about the QML level. So what can we clearly see here? We have a very valid order block right here. I hope you can see that this is a valid order block. What makes it valid? Take a look at this order block we have right here. What confluence can you see? Price left and inefficiency. This is one thing I've always said. There needs to be price inefficiency. If you don't know what inefficiency means, inefficiency is the same thing we call your fair value gap. You can as well call it your imbalance. This is price leaving this inefficiency. Reacting with a massive candle, we have another reaction, a pullback. This pullback right here clearly makes here your liquidity inducement area. And from what you can see, price initially came to the liquidity inducement area and we had this pullback right here. So this was a valid point of interest. Why? We have your order block combined with your price inefficiency, and over here you have your liquidity inducement area. So this makes this a high probability trade opportunity, and that's why I shared it to the VIP community, asking them to get involved from this particular area. Now, before we play price for, let me introduce our mentorship. So our advanced smart money mentorship is still running. In this mentorship, this is where we have beginners and advanced traders in same community talking about institutional trading styles, how to get involved with the institutions, and how to make money from the financial markets. In this mentorship, we don't just teach you how to trade with the institutions, we don't just teach you the trading strategy, but instead we teach you how to become an independent trader, how to become a profitable trader, and how you can stay consistent in the markets. This mentorship costs just $216. If you join this mentorship, you have access to advanced smart money course. You'll be part of our weekly chart breakdown. Every setup you see me share the results, I usually go live with my VIP students where we find this trade opportunity together. We analyze it, they ask questions based on the setup, and they equally go ahead and suggest the pairs they would want us to analyze. You're going to be part of our VIP community. That is a VIP support group where we share trade opportunities, and we have advanced traders in our midst who can as well support you when you have questions or confusion. Going to be part of a premium possible setup. If you join the community, every trade opportunity I trade is shared in that particular community, and you're going to be part of our weekly webinar where we meet on Zoom for our meetings. And if you're not able to join the meetings, most times the meetings are shared in forms of record if you're not able to join. So want to get involved, you can go ahead and pay now. And you can as well click on see more to equally see the reviews from our students who has been part of this community. It's actually a very great community. If you think you need a community of traders where traders share the same mindsets and share what they see when the financial market. You can as well look to join us today. And if you think, okay, you are doing perfectly fine on your own, you can continue doing that. The most important thing is doing what works best for you. Back to the lesson. So now that we've been able to spot the whole trade opportunity, this is me entering the market right here. But something happened. One thing I do every time I trade smart money concept is having a set of rules. And when I set these rules, sometimes I feel that these rules kind of draw me back because there are some trade opportunities where I could make a lot of money that can actually carry me for a whole month without me opening a single position. But I don't do that. I just stick to rules and I just have to continue sticking to my rules. I'm going to explain that better. Now, this is me playing price forward right now. See, price mitigates a level and drops immediately. And this is price continuing to drop to the downside. This particular setup is currently offering about 1:21%. I made just 4% from this trade opportunity. Why? I usually go for 4%. So this was the previous setup when it was still running. And this is that particular setup when it got to the profit target. That's the first order block right here, which price reacted from, got to a target. Like I said, 4 hour bagged, even though price offered more than 4%. So I usually go for 4%, no matter the circumstance. So here is the second trade opportunity when it was running about 7%. I equally went for 4% as usual. If price likes, let it offer 100%. I stick to my rules and it has been working that way. Breaking rules is naturally going to make you a better trader. So we have other setups which I can go ahead and explain. Maybe let's do one more explanation so it's going to help you understand how the institutions actually moves this market and how you can get involved and ride their trend. So this is another trade opportunity. This is on GBP card. Well, I'm not going to explain this. This particular one is very easy and self-explanatory. Let's look for a little complex one. Okay, this one is US30, price means the entry right here. And if you take a look at this particular trade opportunity, you're going to see it looks very similar to the AUDUSD setup, which I just explained. A QML level right here. This is an order block, liquidity inducement area. The only thing is that price missed our entry right here. Okay, let's go ahead and explain the GBPJPY setup. This one looks good as well. So this particular one was on the 2 hours time frame, and as always, I went for 4%. So let's see that on the price chart. So GBPJPY 2 hours time frame. Now, if you've been following us since the last 3 to 4 weeks, we had good trade opportunities on GBPJPY where we got trades playing out. First level played out, second level played out, and the third level equally played out on the same GBPJPY. And if you go back to those lessons was actually insightful. Then we had this particular level right here. I even shared this particular trade opportunity to the free community, but price wasn't able to return back to our point of interest. So since price couldn't return to the point of interest, what do we have to do? We had to move on to the next trade opportunity, right? Now, moving on, when we decided to move on because price couldn't get to the extreme level we have down there, we saw this trade opportunity. The truth is that when I drop some lessons, people ask me, why do you stick to one time frame? The thing is, I don't stick to one time frame. I analyze my charts from time frame to time frame, especially with my VIP student. But most times when I do YouTube content, I just focus on one time frame so I don't waste a lot of time. But I usually look for my daily bias before I drop to these time frames where I find trade opportunity. So this particular trade opportunity was identified on the 2 hours time frame, and when it was identified on 2 hours time frame, this was the whole trading zone, but we did some refinement. So how did we find this trade opportunity? Firstly, you've been able to identify the institutional order flow. So the institutional directional bias is very clear in this particular trade opportunity. If I try to zoom out, institutions are pushing price to the upside. Price is currently moving to the upside. So the best thing to do right now is selecting the easy zone, which is the particular point of interest I already identified right here, and marking that particular refined zone. This is what it looks like. This is the refined zone we have over here. So marking this particular zone, what confluence do we have right here? Price inefficiency. Very, very important. you can't see me taking a trade that doesn't have pricing efficiency. Even if you see the setup, it doesn't have pricing efficiency, ask me for explanation and I will tell you where we have the inefficiency, because maybe we've possibly identified the inefficiency on the higher time frame. Then the zone you see me marking on the lower time frame might not have that inefficiency because of refinement. Okay, so this is the pricing efficiency we have over here, and this is price reacting to the upside, then leaving the inducement areas, which is also necessary. This is your liquidity inducement area. So this is a smart money trap, and a lot of people will look to get involved right here. Now, what you're going to do is simply either getting involved from this zone with your entry confirmations or entering aggressively, which is what I did. Then playing price forward, price comes back, mitigates the level. Then this is price moving away, okay? Price mitigates the level, taps in. Then we had the reaction to the upside, and I was able to make 4% around this particular area. Now, currently, price is dropping to the downside massively. And someone is going to ask, why is that happening? Now, if you understand what I explained on the AUD USD setup, this is exactly what we're going to see here. If you try to read the price action. Now, let's do it again. What was price doing? Price formed this particular high. After that, we had this pullback forming this low. This explains that we are still in an uptrend, right? Price moved from this high, forming a higher high. And after that, we had a pullback right here, a very clear pullback, which formed this low right here. So after the low was formed, price reacted to the upside, breaking above this high. So in case you want to doubt, this is price reacting above this particular high, which is a valid break of structure. So from this low, price prints a higher high right here. After we have this higher high, we had another pullback. Where is the pullback? Here is the pullback forming this low, which reacted to the upside, breaking another structure, forming this higher high we have right here. See, another higher high has been formed. Then price reacted to the downside, forming this shift in market structure. So this is actually price shifting in its structure again before mitigating this level and reacting to the upside. So believe me, we had maybe a QML level around this particular area, but I wasn't seeing it. Why wasn't I seeing it? There was no inefficiency. If I actually had pricing efficiency around this area, believe me, I would have looked to get involved, but it wasn't a valid setup for me, okay? Even if the setup looks good, if it's not valid, I'm not going to take it. Now, playing price forward, see, price starts to move away from there. Hope you can see price reacted from the level and it dropped massively to the downside. So one thing you have to take away from this lesson is, firstly, understanding where the institutions are moving the market to. Secondly, selecting a valid order block. Thirdly, knowing your areas of inefficiency. And lastly, identify your liquidity inducement area. I want you to rewatch this lesson if you're struggling to understand what I just explained. No need to waste time doing a sketch and all that. I believe since you've been following me on this channel, you now have an advanced smart money knowledge. So I don't have to always break it down now like I used to do, okay? I don't have to spoon feed you right now. I believe you are matured enough to understand simple smart money price action. And I believe this particular lesson is actually going to help you out. So if this particular lesson was actually helpful, subscribe to the channel. I'm Solomon of Wisdom, and here is Born to Trade. Thank you very much, and see you in the next lesson.